Hey everyone, welcome back to the channel. Today we are diving in one of the most exciting and sometimes confusing topics in Dubai real estate: investing in off-plan properties. Whether you're an overseas investor, someone new to the property investment, or just curious how people make money buying apartments that don't even exist yet, this video is for you. We'll walk through everything from capital appreciation to rental yield, ROI, payment plans, developer research, and more. Let's get into it. What is capital appreciation in off-plan properties? Capital appreciation simply means the increase in value of your property over time. Now, when you're investing in off-plan, that could be from the day you buy it, during the construction, all the way up to it's completed and handed over. But here is the thing, not every off-plan property will automatically appreciate. Some might even go down in value if the market changes or the location doesn't develop as expected. I've seen people buy off-plan villas that sold out within hours, and in a few months later they were able to sell them for 20% higher. That's what I mean by early capital appreciation. But honestly, trying to time that flip isn't always the best strategy. More often than not, that sweet spot comes after handover, sometimes even a year after. What drives capital appreciation? So what actually makes a property go up in value? Market demand is Dubai attracting more families, then townhouses and villas are going to rise faster than studios. Scarcity: if there are thousands of identical units in the same building, competition is high. Scarcity equals less competition, equals better growth potential. Location and future development. Think metro station, schools, malls, hospitals. This can really boost property values. Developer reputation. A good developer builds on time, keeps quality consistent, and delivers what they promised. Government policies, stability, reforms, and infrastructure investments all play a role in boosting buyer confidence. If you are buying off-plan, ask your agent specific questions. Is there a school planned nearby? When is it due to open? Has the government officially announced it? Because trust me, a metro station opening near your property can change everything. Risk of relying only on capital appreciation. Now, here is something important. Don't put all your eggs in the capital appreciation basket. Yes, it's exciting when prices go up, but what happens if the market slows down? Let me tell you, many investors I talk to start off saying, I'm just buying to flip it. But once they see the kind of rent they can get it, their whole strategy changes. They end up holding onto the property for income instead. That's why I always recommend thinking about both capital growth and rental yield together. It gives you a safer, more balanced return. Historical performance examples. Let's look at the real-world example. A few years ago, you could have bought a 3-bedroom townhouses from Emaar for around 1 million dirhams. Today, the same property is selling for between 2.3–2.5 million dirhams. And if you're renting it out now, you're getting around 150,000 dirhams per year, which is a solid return, especially compared to where you started. But not all properties perform equally. Studios and 1-bedrooms tend to follow rent more closely. So if the rent goes up slowly, so does the value. Whereas larger apartments and villas have consistently shown stronger long-term growth because of the limited supply and rising family demand. Future outlook for off-plan property. We've seen some amazing growth since the pandemic, especially in luxury segments. But I don't think that pace is sustainable forever. In fact, some of those super expensive properties might face a correction in the next 2–3 years. But if you're in it for the long term, that shouldn't scare you. Rental incomes remain strong, and even if values dip slightly, they usually bounce back. The key is to stay patient and keep your eyes on the bigger picture. Understanding rental yield. Rental yield is basically the return you get from renting out your property. There are two types. Gross yield equals annual rent divided by property price. Net yield, gross yield minus expenses like management fees, service charges, etc. For example, property purchased for 1 million dirhams Annual rent 80,000 dirhams. Gross yield 8%. After expenses, say 10,000 dirhams, net yield 7%. Dubai offers some of the highest rental yields globally. London averages 1-2%, India around 3-4%. In Dubai, depending on property type and location, you can easily get 6-8% net yield, making it a very attractive market for international investors. Off-plan versus ready properties. Which is better? Off-plan properties offer better capital growth and rental yield because you buy in early. Ready properties give immediate income but less upside potential. Pros of off-plan: payment plans pay over time, better design and modern amenities, potential for resale profit, less competition. Pros of ready apartments: immediate rental income, no waiting for construction, known maintenance costs. For long-term growth and better ROI, go off-plan. If you need income now, a ready property might suit you better. Financing option and legal process. Overseas investor can get up to 60% financing from Dubai banks, but only after construction is complete and you have a building completion certificate, BCC. Always work with a mortgage broker to find the best deal. Legal steps involved: provide passport copy and KYC documentation. Pay reservation fee plus 4% Dubai Land Department DLD fee. Sign SPA sales and purchase agreement. Follow payment plans set by developer. Final payment plus utility connection before handover. Always review the draft SPA before paying any money. Choosing the right developer. Your developer choice can make or break your investment. Ask these questions. Do they deliver projects on time? Ask their showrooms and marketing materials accurate? What's their reputation for quality and after-sales support? Have any had delays in previous projects? Use tools like RSAPP to track a developer's delivery history. Also check platforms like Property Finder and Bayut to compare rents and sales performance of their older projects. Working with the right real estate agent. A good agent doesn't just sell you a property, they guide you through the entire process. Here is how to qualify your agent. Registers with Dubai Land Department, RERA license. Experience in Dubai real estate. Works with multiple developers. Communicates regularly, WhatsApp, email, calls. Helps with handover and post-handover issues, provides market updates and advice. Avoid agents who disappear after the sale. To recap, off-plan properties offer great potential for capital appreciation and rental yields. Focus on scarcity, developer reputation, and location. Combine capital growth with rental income for a balanced strategy. Work with qualified agents and do through due diligence. Dubai remains one of the top global markets for real estate investment. If you find this video helpful, hit the like button, subscribe to the channel and turn on notifications so you never miss an update. If you're considering investing in Dubai or want help finding the perfect off-plan property, feel free to reach out. My contact details are in the description below. Thanks for watching and I'll see you in the next one. Bye bye.